Hi everyone, so we just got the monthly delivery numbers for last month of 2025, and for NIO they came in at around 48,000 deliveries, which combines together to 326,000 for the entire 2025. That is almost 47% higher than 2024, and I'm expecting a really strong 2026. In fact, I do expect that NIO will have around 500,000 car sales next year, and this is based on a few significant factors. For the first time in 3 years, I do expect that NIO will have a much more stable sales throughout the year. In 2024 and 2025, we've seen that it was a much more higher sales numbers for NIO in the second half of the year, and you can see that in the blue bars, in the green bars, and in the gray bars, that it's a huge difference between January, February, even March and April. And then as you scale up in, latter end of the year, as we get close to the summer, in May, June and July and onwards, there's a much higher sales numbers traditionally for NIO in the past 3 years. This year, I do expect that we will see still, a regression in terms of monthly delivery numbers in January and February. And in addition to the Chinese New Year's, we've seen also generally that for automotive manufacturers, Q1 is quite slow. Q2 is usually a bit like starting to increase the pace, and then Q3 and Q4 they start to have the record sales, at least for the companies like NIO and XPeng. But this year I do expect that the drop off from Q4 of 2025 to Q4 of 2026 will be much lower than previously. Look at the numbers, for example, in Q4 of 2023 they had 50,000 cars and it dropped off to 30,000. So that's like about 60% decrease quarter-over-quarter. Then you had also Q4 of 24 at 74,000 almost. And then in next quarter, which was Q1 of 2025, they fall down to 42,000. This year, in 2025 in Q4, i.e. yesterday, they had 124,000 deliveries, almost 125,000 deliveries. But then you can see that my expectations is that it will fall down significantly, but still not to the extent of what it was previously. So I would expect like a 20%, maybe in worst case scenario 30-35% reduction in deliveries quarter-over-quarter from Q4 of last year to Q1 of this year, whereas previously it would have been like 50, 60, 70% at times. So that's why I do expect that in 2026 NIO will have much stronger numbers in the first half, and that is why we will see most likely even exceeding the year-over-year pace increase in terms of deliveries from 2026 compared to 2025. Now the interesting part for me again is always comparison between the valuation of some of these companies. As you see here, Li Auto in the white, XPeng in the blue, NIO in the green and Tesla in the red. And you've seen this chart, a few years now, but if you see that Tesla was really strong, again, I haven't added the likes of Zeekr and all the other competitors in China. I just thought having at least 3 of them is pointing to the correct picture. Maybe I should add also Zeekr in the future. But you can see here that Tesla was really strong, 500,000 cars in 2020, which was essentially 80% of the market share between these 3 or these 4 players. But looking at, expectations for 2026, I wouldn't be surprised if Tesla has yet another sales decrease in 2026 compared to 2025. You see that they managed to have their all-time best deliveries in 2023, slight reduction in 24, significant reduction last year in 25. Now you could argue that 2026 could be even 2 million in best case scenario. So instead of 400,000 cars every quarter, they do 500,000 every quarter. That is a significant growth for Tesla, but it's still barely 200,000 more than, essentially 10% more than their all-time high of 2023. Whereas NIO, we are looking at, depends on where we sit in our expectations. Again, in my previous slide, I had them at around 510,000. Now in a slightly more bullish scenario at 540,000, they would still be getting close to 50% of the market between these 4 players if you add them together, like NIO, XPeng and Li Auto compared to Tesla. So then with this information in hindsight, you look at the commenters from the comments from Alojo, like AJ on Twitter and some of his followers. And I understand, to be honest, me, that I've been quite critical towards NIO management. And I do believe that they really went out of hand and essentially destroyed shareholder value and trust from shareholders in 23, 24 and even early last year. But now things have changed, and I think we have to be confident enough and we have to be honest enough to change our minds. And currently as things stand, I do expect and I do believe that NIO management is fully serious regarding profitability. And let's not forget that they actually have improved significantly. I mean, from almost $1 billion in net loss in Q4 of 2024 and Q1 of 2025 to projections of, less than 100 million net loss in Q4 of 25. And that is like a significant improvement. And if you scroll like to expectations for, let's say, end of 2026, we are probably looking at a profitable quarters, at least 2 or 3 maybe even. Like you could argue that Q4 of 25 and Q1 of 26 are still a net loss, just about. And then maybe in Q2 and Q3, somewhat of a net profit. And then in Q4, significant net profit for NIO. And when you have this kind of consideration, and you can see that, the gross margins are improving, right? I mean, at some point, if you look at the vehicle gross margin, right, which is very important, they had a margins of 20.9% in 21 Q4. Then it reduced to 18%, and then, it just went south, and we had like this really, really bad moment from end of 21 to, let's say, I don't know, like beginning of 2025, where they had margins of like, 6%, 5%. So it was like really, really bad. I understand that. But now it's again going back to the right direction, right? I mean, last quarter, 14.7% vehicle margin. And now we are looking at anywhere between 17 to 20%. Let's say 18, 19% gross margin, vehicle margin, right? And a gross margin of around 18.5 for Q4 of 2025. And you can see that also they have become more efficient. So they reduced their R&D budget. They reduced their SG&A budget. I mean, it was like the SG&A budget was around almost at 700 million at some point, just around a year ago. And the R&D budget was around, I mean, like you can see the highest that we've seen here is around 560 million in Q4 of 2023. And ever since, they have actually reduced it step by step. And the total operating expenditure is now expected to be around 890 to 800 million, right? And that is like significant efficiency improvements compared to where they were out a year ago. So no matter how you look at these, things are looking really, really bright for NIO. And it's a bit sad to see that these people not being honest about it. I mean, he always looks for the negative about NIO, and I also looked for the negative, like when times were really, really negative. But again, things are changing. Like a business can change, a management group can change, and we should be honest with ourselves. And I do think that AJ is a little bit like a sour grape here, and he simply like cannot accept that NIO. I mean, sure, Xpeng has an exceptional year, right? 126% year over year, really nice. But they also sell the cars at much lower average sales price. They don't have the battery swap infrastructure, which start to make money for NIO as we go onwards, and we already see that. Like it's not like a future extrapolations like the Tesla bulls talk about when they talk about Tesla FSD, right? We will obviously discuss FSD because I see huge amount of like misconceptions and super misunderstandings about the valuation of Tesla's so-called full self-driving. But with NIO's, let's say other sales, which is, battery as a service, the swap fees, the energy infrastructure, the power grid balancing, the energy arbitrage, all that comes with the battery swap infrastructure, the ease of access to change a faulty battery, which no one else has, right? There's so many different advantages. And as you can see on this graph, the other sales revenue is starting to get really interesting. Again, you can see that the revenue from other sales is in the blue and the cost of other sales in the white. It's starting to scale up and it starts to become profitable, and it's not going to become less profitable as time goes on and as the vehicle fleet increases. And if you look at some other like metrics, look at, for example, swaps per quarter. Currently we are at around 9, or let's say give or take 9 million swaps every single quarter, and in short amount of time they will be at around like 20 million swaps every single quarter. And essentially in 2 years time they will more than double the swaps per quarter, the swaps per month, which means that as they start to monetize the swap infrastructure, it started to get actually the volume, like the snowball effect starts to roll in. Tesla bulls always talk about, don't look at the vehicle delivery numbers because it's all about the full self-driving and it's all about the, the Optimus program. But what if the Tesla bulls are right? Well, I simply say that I don't think they are right. Because why? So if you're buying a car, and most of the cars you buy today on the market are like on, let's say, level 2. So they might help you with lane assist slightly. They might help you with, auto braking if there's a car too close to you in front of you. In level 2, you have to always be aware and you have to always be ready to take over, right? And if you look at the advantages of these like different systems, Tesla again currently at level 2, the competitors like, let's say, Mercedes or BMW and even like NIO aiming with a full sensor suite of LiDARs, radars and camera for level 3 and even more so level 4 and onwards. Where is the disconnect? Well, if you look at some videos about reviews for Tesla full self-driving, right? It's always in this clear weather, like in California, the sun is up and clear in full bright day, and it's not in the night time. Because why? Because the camera is great at like object detection, and especially if the weather is great. But as you can see on this chart here, when it's bad weather, when it's lightning, where it's like, let's say if there's a fog, especially, I think like I would love to see a Tesla FSD even in the latest versions in a fog situation, right? When there's fog, I mean, and snow even, it's gonna struggle. And this is where companies like Mercedes and NIO is a complete different animal, because NIO's autonomy stack is built like Mercedes with sensor redundancy, right? And modern radars that are ideal because it provides cheap and high resolution perception that works when vision physically breaks down. And why does vision break down? And the reason is that because rain and snow scatters visible light, and that destroys the contrast and the depth before the image reaches the sensor, right? So when the light is scattered, the camera never receives a reliable like information. And no matter how good your software or AI is, it cannot reconstruct the data that is physically lost before it even reaches the sensor. Whereas a radar can see through the fog. Some of the radars can actually detect even a car in front of the car. So the camera simply cannot do that. And I think this is where like a lot of Tesla bulls are simply like in like la la land, because they believe that they're gonna get in the entire market, and there's a reason why no one else is relying only on vision only full self-driving, right? Look at NIO's net profit margin compared to Tesla. Sure, in early 2024 it was absolutely abysmal, like, and it was a case like, I mean, if they have this kind of profit margins making this amount of losses, will NIO even be a like viable company in the future? I understand that, and there was a reason why the stock price struggled, and there's a reason why I was like really critical towards the management, because I felt that they didn't need to invest so heavily in, for example, swap infrastructure and some other investments, like maybe scale down the number of models that, and we can see that at any given time, even today, despite amazing deliveries for NIO in 2025 and my projections for next year, we can see that still some models are not selling that well, right, at any given time. So my criticism there was, why invest so much money, why make so much huge losses and end up in a situation when we have to multiple times raise capital and lose the shareholders. But also remember that while the criticism back then in 2024 was that NIO has too many models, right? And they might cut back on the R&D investment in order to like reduce the net loss and some other investments, obviously. But now, still today, with the same amount of models, like, 15, 16 different models, 3 different brands, NIO, Onvo and Firefly, they seem to be able to reach in a position where they will have, give or take, same profit margin at Tesla. But Tesla only has like 3 or 4 different models, Model Y, Model S, Model X and Model 3. So in a way, NIO is actually more efficient than Tesla. Now, obviously, they have the Tesla Optimus, but then NIO has NIO swap infrastructure. They have also the Shenji program, their own chip manufacturing. So yeah, at the end of the day, I think like everything points to the fact that NIO is extremely undervalued, and could be the same thing could be said also obviously with the likes of Xpeng. Although I would say that currently I would rather see that NIO is even more undervalued than Xpeng. But I think it's just a question of time, so long as the management doesn't like mess this projection up. Like if they start to do something again, like start to invest unreasonable amount of money on R&D budget, and all of a sudden we start to see that the operating expenditure starts to go up again, to the levels of like 1.2, 1.3 billion already in 2026 per quarter, then we have a problem again. But unless they do that, and the signals coming from the management seems to be they are serious about the situation, and I see that we are having a really great time. I mean, honestly, even a 50 billion market cap compared to Tesla is still like super undervalued. So anyways, that was just a very long update on NIO, and thanks for your time, and see you in the next one.